like to just start off setting the scene with a handful of slides. I know we'll have lots of questions, so I will try to keep the slides brief, and then we can spend as much time on Q&A as possible. So let's just sort of jump into the Farfetch business. I'm not sure if everyone watching this will be familiar with the business, so let's just talk about our mission to begin with. Farfetch has the mission to be the platform for the luxury industry. It's a super exciting industry, a $300 billion industry, and Farfetch is destined to be the platform enabling that industry from a technology point of view to connect the curators and creators of fashion with the consumers of fashion globally. We believe that fashion is a good part of culture. It allows people to express their individuality and is indeed a way for people to really truly live their lives, and Farfetch is here to make sure that those consumers and customers can find the very best of luxury, in particular fashion, for them to do just that. So let's talk about how the business operates. Here you can see how we've built the platform over the last 12 years since the business was launched in 2008. And we've built the business on a technology stack that allows for multiple tenants at an enterprise level to enjoy the benefits of the global infrastructure, along with a data layer and empowering better decisions by consumers, better practices by our business-to-business customers through use of that data. And we've also partnered with the very best global logistics partners around the world to be able to provide a services layer that enables the consumers to really have a luxury experience wherever they are in the world. You can see that we actually do a lot of services for the clients that plug into the platform, whether that be e-concessions, which is effectively enabling businesses to be able to sell the product from their own locations through our technology layer to any customer wherever that person might be in the world. We provide everything around production, from photography of the images on the website, good descriptions, translations, multi-currency enablement, and of course also the logistics in terms of customer service and transporting goods back and forth across the globe with our logistics partners. We also have design studios, so we're able to power the creation of new brands through working with creative directors and plugging in the business aspects of creating a fashion label, including, of course, design, manufacturing, sourcing of product, and, of course, marketing, as well as broadcast and sale across the Farfetch technology platform. Sitting on top of all these services are the revenue drivers of the Farfetch group. The marketplaces still make up the bulk of Farfetch's trade today. We have two principal marketplaces. We have Farfetch, which is for premium luxury goods. I'll come on to the various categories shortly. And we also have Stadium Goods, which is a reseller of sneakers, a very exciting and fast-growing part of the luxury space. We also have Farfetch Platform Solutions, which is enablement of enterprise-level solutions for our clients. That commonly is a white-label solution where we're powering the websites of brands and retailers across the luxury fashion space. We have Curiosity China, which enables brands to be able to interact with the WeChat and Tencent business within China. And we also have Store of the Future, which underpins our luxury new retail concept, whereby we're integrating online and offline in terms of a rich customer experience, and of course helping the brands bridge this significant transition from offline to online as we move forward. And then lastly, as I alluded to before, in creating new designs, new brands, we have a brand platform whereby we are delivering new brands to the industry on a regular cadence. The business that we acquired about 18 months ago now, New Guards Group, based out of Milan, has already created brands such as Off-White, Palm Angels here in Preston, and we're working on developing those brands as well as others such as Opening Ceremony, Ambush, et cetera, et cetera. So the entire platform is designed to be able to enable the industry to trade into the future, which is very important because as I go to the next slide, you can see that the luxury fashion industry is resilient. It's an industry that bounces back and holds to growth over many years. As you can see here, that recent shocks in 2007, 2008 with the financial crisis did impact the industry, but for a very brief time, 2009, 2010, the industry bounced back very quickly, and over the last 20 years or so has been growing at a compound annual growth rate of around 5%. It's a $300 billion industry, as I said before, or at least it was in 2019. Of course, 2020 has induced another shock within the industry. But you can see as we look at the Bain statistics and models in terms of how the industry will develop over the future, we're expecting a bounce back relatively quickly into 2021 and then beyond to get back on track to that long-term 5% CAGR. In the meantime, you can see that online is growing very, very rapidly and taking share from offline retailers. Started off very, very slowly. It's still a very underpenetrated category in terms of online. In 2019, it was estimated at around 10 to 12% of the overall $330 billion business. And of course, has been growing very, very, very rapidly with around 28% CAGR since 2009 to 2019. Again, that rapid growth of online was expected to continue at around about 20 to 25% over the next 5 years, which I'll come back to as a key driver of the Farfetch business as we move forward. The industry not only is huge and $330 billion business and growing by significant amounts to 430 plus in 2025, but this transition online is quite remarkable. We're moving from around 12% overall online share through to an expected minimum 30% of online share within the industry within the next 5 years. That's very, very exciting, and it's driven from the consumer. The consumer is moving very rapidly online within luxury fashion, very used to shopping other categories online, and of course now as a global customer base is expecting to be able to find a product from all designers all over the world to be sent to them at home through internet shopping. And Farfetch is absolutely the driving force within in the industry behind enabling that transition. It's also being driven now by the younger audience. There's a generational shift at play, whereby we believe by sort of the next 5 years or so, the Generation Z, millennial age bracket will be driving the vast majority of luxury fashion consumption. And then, of course, younger generations will come further through and drive even more growth as we move forward. So needing to have an outreach through to a younger customer group, who by definition is digitally native and therefore more digitally savvy, and therefore driving this online growth is a very important thing for the industry to be focused on as we move forward. And of course, as I mentioned before, we're seeing it become less about Europe and North America in terms of the geographies that are shopping. We're now seeing a strong growth from all corners of the globe, particularly emerging markets starting to really drive the luxury consumption as we move forward. And this stat that we pulled out from Bain really highlights the importance of China in that roughly half of everything sold in terms of luxury fashion by 2025 will be sold to a Chinese national either at home or abroad. So Farfetch has developed a strategy to maximize the benefits that can come from those four sort of generational shifts, these sort of fantastic shifts that are happening to drive the growth of luxury in the direction that Farfetch is heading. The first is by, of course, locking in and making sure that we're working on behalf of our luxury partners. We currently have 3,500 brands that we service either directly through an e-concession, 550 are direct, or through a network of multi-brand boutiques and department stores that stock those 550 we work directly, but another roughly 3,000 designers and brands. And that enables us to be able to bring together a very rich view of the world's best luxury, of course, curated by ourselves in terms of which brands and which categories we should be serving, but then additional curation from the brands and the boutiques themselves around finding the best from each edit and having it within their stores and therefore on the Farfetch marketplace, the Farfetch platform. Those brand relationships are very key, and we work very hard to continue to build trust and continue to build a relationship with those brands so that they know that we are upholding the key aspects of the brand, whether that be the luxury look and feel, the adjacencies of which brands they want to be associated with. Of course, price integrity is very key, and we enable through a number of tools the brands and the boutiques to be able to adjust prices if they need to in order to continue to drive a luxury feel, and of course, importantly, towards more full price sales as the industry moves forward. We also work very hardly and have a strategic initiative around unrivaled customer experience. This is making sure that every time a consumer goes onto Farfetch, it's personalized, it feels specifically curated for that customer. The end-to-end approach of delivery, customer service, returns, if that might be the case, is of course at the highest level that a luxury consumer would expect. Our average order value on the Farfetch marketplace is over $600, so you can expect that someone spending that much on an item within the internet space requires the very best experience, and we deliver that. We're also working in terms of our technology on developing out from the marketplace and white label to enable a true luxury new retail experience. We've partnered with Alibaba and Richemont to further develop the initiatives in this space. But with 30% of luxury online in the next 5 years, that leaves 70% offline. And that aspect of luxury consumption needs to continue to build around its use of data, its digital technologies, and effectively taking luxury from a purchase that's a very sort of 80s in style to, of course, the 2020 and 2030 approach. We're constantly thinking about how the consumer will want to shop for luxury in the next 5 to 10 years, and therefore our investment around our technology and our data layers and how we interact with our brands and consumers is very much focused on that forward thinking. We also focus very much on the brand. We want the Farfetch brand to be synonymous with luxury consumption. We want it to be the first and last place you go to buy a luxury fashion. This is one area where we have a significant amount of opportunity and a space to grow, because we often say that the Farfetch business at $3 billion of GMV last year is bigger than the brand itself, and we have work to do to continue to drive a mindset shift and awareness within the global consumer base. Last year, we actually served 3 million active consumers. That's customer shopping with us over the last 12 months. And so we have a fantastic pool of customers to continue to drive share of wallet and further growth within the industry by being more top of mind in terms of luxury consumption. And then lastly, China is a key focus for us. I'll come on to this in a bit more detail, but clearly if at least half of the industry is going to be driven by the Chinese consumer, then we need to make sure we are number one in the China market in terms of luxury consumption. Before I go into how we might develop on those 5 strategic aspects in 2021, I just wanted to touch on our 2020 results. And first of all, Q4, you can see we've had another strong quarter with overall GMV growth of 43% in the fourth quarter, which was underpinned by the digital platform, which grew 49% year on year. Now, that growth, of course, is being driven by our existing customer base continuing to come back and shop with us and increase frequency of shop, but also was driven by the largest ever new customer number. We acquired in Q4 over 500,000 customers to be the largest ever new customer cohort, which is super exciting as we look into the future to try and retain those customers and continue to serve them as we move forward. Revenue grew 37% year on year. The digital platform was up 53% year on year as we continue to drive more of our own label in terms of first party original. We, of course, have Off-White and Palm Angels brands that are part of the business now. And those brands in particular are driving much faster growth within the industry than we are seeing with our third party brands. And so that drives additional revenue growth and, of course, margin growth as we move forward. In terms of gross profit, you can see there that we were relatively stable at 54.5% gross margin on the digital platform. We're seeing very strong margin growth on the first party and first party original business. We're seeing very good growth in terms of our platform solutions clients, where we have much higher margin revenue because of lower costs. But at the same time, on the third party business, we're seeing costs coming through from shipping and outbound and returns with the current demand supply constraints we're seeing around the logistics network globally. In terms of full year numbers, you can see that the GMV for the group was above $3 billion, helped by that fourth quarter at $1 billion. Again, the largest ever quarter in Q4. Our full year growth in terms of the digital platform was 42% year on year. And you can see actually over the full year, we expanded our revenues and our gross margins ahead of that number by driving higher margin categories and ultimately improving on our first party margins and reducing our spend in terms of promotional investment, which is an impact to gross profit. We finished the year in a profitable place. So Q4 was our first ever profitable quarter of $10 million at the adjusted EBITDA level and in a very strong place financially with $1.6 billion of cash and cash equivalents at the end of December. So we enter into 2021 with fantastic momentum in terms of year-on-year growth, much stronger margins in terms of the unit economics that we've been able to deliver, ultimately a good scale on the platform to drive the profitability in the fourth quarter, and of course cash to invest in the 5 strategic areas of the business that we talked about before. So the year ahead is very, very exciting. As I click on to what we've given as our main focus in terms of the path to profitability, which you'll see in a minute in terms of guidance, is the goal for 2021 full year. First is to continue to grow GMV ahead of the overall industry. We've set our digital platform to grow at 30 to 35% for the year ahead. That's ahead of the 20 to 25% growth within the industry and will allow us to continue to deliver market share gains. We'll continue to see improvement at the order contribution level and gross margins by driving improved unit economics and, of course, working with our partners to continue to see more value being delivered on a per order basis. And then lastly, of course, continuing to scale the fixed cost base to see further leverage year on year to enable to deliver full year profitability for 2021. The detail of that guidance there is, as you can see there, so digital platform growth for the full year of 30 to 35% on the back of 42% last year. We'll see expansion of the digital platform order contribution margin to be between 35 to 37%, an improvement on the 35% we finished the overall last year on. The operating cost leverage will continue to come through, as I've said, 38 to 40% of revenue spent on our SG&A and our technology spend against 42% last year. And that will deliver a continued improvement in terms of profitability to achieve positive 1 to 2% EBITDA margins versus minus 3% we achieved in 2020. Let's look at specifically some of the strategic initiatives. I won't go through every one of these. They're on the website in farfetchinvestors.com. But the key focus in terms of our expansion with our partners is around the categories that continue to really drive the industry forward, particularly around watches, fine jewelry, children's wear and accessories. We have continued to broaden our SKU count in this area, the number of items we have on the website, and the depth of product within these categories also grows and to underpin the GMV growth we're expecting for the year ahead. In terms of customer experience, the focus will be on our private client customer base. 1% of our customer base we consider to be the VIP private client. They drive somewhere between 25 to 30% of our overall GMV, so a very important customer base. Getting the proposition right for those customers also allows us to ensure that we're driving a luxury experience for the other 99% of the customers that shop at Farfetch and really elevates the Farfetch overall experience. You'll also see we're investing this year to launch beauty next year to further expand our categories. That's an exciting category for us. I'm sure there'll be many questions on that as we move to the Q&A section. In terms of luxury new retail, as I said before, now partnering with Alibaba and Richemont to really develop out the initiatives that will drive growth for Farfetch in many years to come, an additional layer of growth in terms of the customer experience in store. We are opening our Brook Street location for Browns, the boutique that we own here in London, as soon as the path out of lockdown allows us to. We're expecting that to be in the middle of April, and the store's looking absolutely fantastic. The very latest of technology and kit to enable our fashion advisors in that store to really interact with consumers in a completely different way than we've seen in the past. And of course, e-concessions, which we operate as a service for our white label clients, namely Harrods, we continue to expand and develop that proposition over the next 12 months. In terms of the brand, we'll be focusing on what we call only on Farfetch, that unique product and unique experiences that you can only find on the Farfetch marketplace, underpinned, of course, by New Guards Group brands such as Palm Angels, Off-White, Ambush, but also exclusives that we have with other brands. I'll refer that we launched with AZ Factory from the Richemont brands, along with Anita Porter most recently, and last year we launched Fenty, LVMH's brand, with Rihanna on an exclusive multi-brand relationship. That will be underpinned by a new brand campaign. You can look out for that in April to drive further awareness. And then lastly, on China, we have now gone live on the Luxury Pavilion, the Alibaba platform for luxury. I'll come back to that in a minute. Super exciting to develop that partnership and really learn how to optimize that exciting channel, plus also continue to push Farfetch app and Farfetch.cn as the way for customers within China to be able to buy luxury fashion from Europe. So why is it so exciting to have launched on the Luxury Pavilion? These stats here paint the picture. Alibaba has 779 million customers. That compares to our 3 million customers globally, so a significant customer base for us to now broadcast the Farfetch message about shopping luxury from the very best boutiques and brands across Europe. That's 3,500 brands, as I said before. Something like 90% of those brands have not had a presence on Luxury Pavilion Alibaba before. So we're introducing the 779 million customers to some super exciting brands in terms of what we're able to provide. This is an experience, so you will, on Tmall, click on the category button to find the Luxury Pavilion. We have then prime position in the bottom of the Luxury Pavilion's home screen, a button that you click on to take you through to the Farfetch storefront. And the experience then, on terms of the Farfetch store, you can see is very slick, very clean, and very, very focused on luxury experience. And of course, bringing those brands from Europe to the Chinese consumer across all mainland China. I'll just finish on our environmental, social and governance agenda. Last year, we had significant progress in terms of reducing our carbon impacts by 12%. Our goal by 2030 is to be a climate positive, more than neutral, but now positive. We also focused on conscious edit. 3.5 times more conscious product was available on the website through partnering with fantastic brands such as Stella McCartney, for example. We also saw a circular aspect of Farfetch coming through, 3 times as much in terms of circular product. That's reselling and reusing product and allowing customers to sell product on to other fashion lovers to love the product and take it forward. And then, of course, lastly, in terms of our conscious inclusion efforts, we have delivered now on broadening out our Farfetch people communities and engaging with our Farfetch people in a way that we've not seen before to really live the Farfetch values and further commit to conscious inclusion work as we move forward towards 2030. So that's a quick rundown. The only truly global platform within the industry, on track to deliver profitability this year, well set up with our fashion and luxury partners, and of course 3 million active consumers to continue to fuel growth moving forward. And I'll turn back to Lloyd for some Q&A.
Great. All right. Thanks for the overview, Elliot. Helpful, particularly for those newer to the story. I'll kick off with a question on guidance. You know, you touched on it. You recently guided to 30 to 35% growth in 2021. You've tended to be conservative in the past, with social and travel restrictions likely to ease later this year. Can you talk about the puts and takes, you contemplated as you considered the guidance?
Yeah, absolutely. I think what we've done and set the guidance is 2 things. Focus on long-term sustainable growth. We've always believed, as we did last year at this time, that sort of 30% level of growth is something that Farfetch can deliver in terms of a regular cadence as we move forward year after year after year in the medium term. And we've also focused on making sure we're ahead of the market by leading this transition online. If the industry is going to be growing somewhere between 20 to 25%, then 30 to 35% puts us clearly ahead of everybody. Now, there's a lot of moving parts. On the plus side, there is absolutely, as you said, further lockdowns. Maybe travel won't be coming back, international travel won't be coming back as we've seen it in the past. So we are going to have more customers shopping at home on the app and wanting Farfetch to bring product from Europe to wherever they might be. We've also got 3 million active consumers, the biggest ever cohorts across the last 12 months for us to continue to target, and we will be driving further brand awareness and investing behind those customer cohorts to drive growth as we move forward. We've also got the Luxury Pavilion now live. I think we need to just be a bit cautious on how much that might contribute to the growth moving forward, because there's a lot of learning, a lot of analysis, and a lot of optimization that the team in China now has to work through over the coming months to get it right. we believe that that's a key driver of growth for next year, not so much this year as we continue to optimize and develop out the way that we will operate on that platform. So there are some positives that could really push Farfetch in the right direction in the 12 months ahead. But on the flip side, there's also some areas where we need to be a bit cautious. The first is we're annualizing the growth of that new customer base from last year. So there is always, with most internet companies, a dropout rate from your first purchase to the second purchase. That is quite difficult to annualize, particularly when you have the biggest ever new cohorts to deal with. And so we need to be careful as we enter Q2, Q3, and then Q4, what we're going to see in terms of dropout, and therefore the impact on the growth rates in the year ahead. Once we get through those growth rates and that sort of negative impact of the dropout, we will then be left with a very, very strong customer base to continue to grow moving forward, as I've said. And we are seeing signs that those cohorts are better than previous cohorts. We are seeing slightly better retention, slightly better frequency of shop, therefore higher lifetime values than previous cohorts. But we just need to moderate through those growth rates moving forward. And then we also have the opening of Harrods.com as a white label client. Around this time last year, we went live, and over the 9 months that are ahead of us, it really grew, and therefore there is some annualization for us to get over. And then lastly, we do not know what economic impacts there might be from the pandemic continuing across this year. So there are aspects that we need to be cautious about. And when we've looked at all of those combined, we've settled on 30 to 35% as the right growth for us to target. Again, lead the market online, set ourselves up well for ongoing sustainable growth. And of course, if that changes, as we normally do, we will be updating our guidance as we talk to the market each quarter. And if we need to change guidance up or down or reiterate existing guidance, we'll do that on the next quarter.
Okay. You recently talked about expansion into pre-owned, the launch of pre-order, and then also category expansion into beauty. Can you talk a little bit about each of these? How does a pre-owned business work? On pre-order, is that brands providing sneak access to upcoming lines on a wider basis? Tell us about some of these initiatives.
Yeah, sure. So let's start with beauty. Beauty will be live next year. This year is about investment and building the overall proposition, working with beauty partners. I think what's exciting about the beauty proposition at Farfetch is that it will continue to operate on the e-concession model, which is fairly new for the beauty industry in terms of multi-brand routes to the customer. We're seeing a lot of interest from existing brands, clearly, that are on the platform that have fashion and accessories. They also have beauty categories, and they see a way that Farfetch can really talk to their consumers across all those categories in a unique fashion, but also use our technology to drive experiences online that maybe they have not been able to deliver elsewhere. We're also seeing interest from new brands that don't have fashion as part of their overall offering. Beauty is a very fragmented category in terms of the number of different brands. And again, being able to bring all of those brands back together for a single customer experience is going to be quite exciting for the industry. And again, with the e-concession model, we can find stock from different brands and make sure it's available in terms of a single point for the customer to shop from. So that's something that's exciting for next year. Bearing in mind, beauty is roughly 25% of the overall $300 billion industry. So it's definitely a category that Farfetch should be playing in. And I think we can do a great job at executing on and continue to layer in growth as we move forward. In terms of pre-owned, we've been working with partners to enable this to happen for customers. We've seen Thrift Plus, which is a charitable organisation here in the UK, where you can sell your product on their website and you'll get Farfetch credit, as well as donations to the charity of your choice on pre-loved fashion product. That's very exciting, and we're seeing great response from our customers on that, particularly as you've been in lockdown, you've looked at your wardrobe, you've had a clear out, and you've used Thrift Plus to drive charitable donations, but also credit back for Farfetch shopping. Second Life is the sort of next initiative, which again, partnering with a third-party supplier, our customers are able to sell their handbags and designer accessories with Second Life, and again, monetize some of their wardrobe. And this is what's driving our growth in terms of circular economy as we move forward. We're still looking at other ways to do it. We have vintage product available on Farfetch, but we don't have sort of pre-loved as a category on Farfetch as yet. We're obviously continuing to investigate and review what could be done in the space, and learn also from Second Life and Thrift Plus the best way to operate this category moving forward. So for 2021, not a big driver of growth, although very important for our customers in terms of customer retention, that they are able to satisfy that need in terms of their wardrobe. Pre-order at the moment is very much focused on our VIP customers. I talked about that top 1% before, enabling them to get access to product that has yet to land into the Farfetch catalog. We have a service called Fashion Concierge, which allows customers to interact with our stylists to ask for product that they might not be able to find anywhere else. Actually, it extends beyond fashion. We've focused a lot on other categories in the space, sort of bespoke service concierge. It's been a key driver of watches and fine jewelry. And in terms of pre-order, that's the focus now. As we learn, again, more about what's available from Catwalk, what's available in terms of pre-collections, we'll be able to roll that out to the rest of our customer base as we move forward. But I don't think that initiative is something we should bank on for 2021. Again, 2022 is the space where pre-order will come through. So, we've got a lot that's being developed in the background, Lloyd, in terms of what continues to drive growth as we move forward.
Great. I wanted to hop over to the China JV. We're getting some questions from the audience as well on this. It's obviously a really exciting development for you guys. So I guess the first question would just be, how are your JV partners, Alibaba and Richemont, helping you in China? Let's start there.
Yeah, I mean, the launch has been a big splash, and particularly Alibaba has helped drive that. We've had an integrated campaign across a number of different channels in order to really boost awareness and drive an understanding of what Farfetch is to the Alibaba customer, the luxury pavilion customer. Again, Farfetch. One of our biggest opportunities is to drive brand awareness. Farfetch has a fantastic service proposition. We've got all the brands. We've got significant SKU count across those brands. We've got something like 10 times as much as the nearest online luxury competitor in terms of breadth and depth of supply of the best brands. We've even got often more online of certain key European brands because of their boutique network supplies a broader view of the brand than the brand might have itself on its own .com website. So leveraging that story and making sure that's broadcast to customers is quite key. And Alibaba, I'm very excited. Obviously, as a partner, we have jointly invested in the JV that will drive Farfetch China moving forward. We own 75%, Richemont, Alibaba, between them own the other 25%. So there's real financial alignment around what we're doing in terms of driving the Farfetch presence within the luxury pavilion. Bearing in mind that the luxury pavilion's been operating now for a number of years and hasn't had a growth in terms of European luxury fashion brands on it, something like 200 brands in total. Overnight, with Farfetch going live, there's now over 3,000 designers available. So they're very keen to push this proposition to their customers as well. And so we're jointly lining up on that and fantastic support. I mean, we've seen real sort of partnership at all levels of the organization in order for us to really understand and drive the growth of the business really from day one. But of course, learning what we need to deliver to optimize the number of cohorts they have and how their customers interact is very key for us as well, and they're helping with that too.
So you mentioned having a broad marketing campaign. We actually have two separate questions from the audience on this. Can you elaborate a bit on just strategically what the plan is, and then to the extent you're comfortable getting specific in terms of budget and how you think about the timeline of the marketing campaign launch around the Tmall launch?
Yeah, I won't elaborate on budget. Obviously, we've talked about in the guidance on the fourth quarter call, increasing our brand spend, our digital marketing presence in China. That's all built into the guidance that we've given in terms of where order contribution will land and where EBITDA margins will land. What we've been focusing on is a sort of, as I said, integrated approach. So we've obviously been driving awareness on Tmall. We've been working in terms of other social channels and a broader sort of upper funnel media campaign inside China. We've been using KOLs in terms of opinion leaders within the space and really driving the use of their social media platforms and of course other celebrities and sort of a broader message that really sort of tries to do a whole 360-degree approach to going live. We've also made a big splash in terms of free gift with purchase if you've shopped with Farfetch for the first time through the luxury pavilion. That's very important coming out of the Chinese New Year to focus on supporting our customers in terms of additional gifting and promoting the service through gifts, which of course is well received. And so we've really sort of done a very big splash to drive it. We're still assessing the impact of that on awareness, in particular on the number of customers that have visited our part of the luxury pavilion, and we'll dust off that report and then go again and continue to push on driving customer awareness and bring customers into our part of the luxury pavilion as we move forward over the next 12 months. Importantly as well, why we've done it outside Tmall in terms of online and offline social media KOLs is that we also want to make sure that Farfetch standalone is seen as the place where you can go to buy luxury, not just through the TLP platform, but across all Farfetch channels in China. And it's a very broad approach to make sure we can deliver on that objective as well.
So when you look at Chinese consumers, can you give us a sense of how much of their luxury spend, maybe pre-pandemic, was on luxury pavilion on Tmall, and kind of looking at Chinese luxury spend more broadly? Do you have a sense for how that domestic spend has broken down between online versus physical as it's been repatriated? And then maybe a sense of how much is broken down between brands' own retail stores, brands' China-facing online stores, and other online outlets? Like any rough sense for how to think about that, particularly as it's getting repatriated?
Yeah, absolutely. There's definitely stronger growth of online within mainland China as it's been repatriated. The store network has obviously been constrained. It's limited in terms of which cities you have luxury stores, and we are seeing a bounce back from last year in terms of that level of trade. But we are absolutely seeing this adoption of online as the key area of repatriation. If you look at that global figure that I showed on the earlier slide around where the luxury market is, it overall has shrunk. And I think part of that shrinking is the spend that the Chinese consumer made whilst traveling abroad has not fully just transferred back home. I think there is an element of reduction in terms of that spend. So we're not seeing a like-for-like shift of the international trade to domestic consumption. A part of the reduction overall in the industry is that the Chinese consumer as well has reduced in terms of overall spend. But where it has retained has basically been online, and of course is what's helped to drive the growth in new customers with Farfetch over the last 12 months, the growth of our mainland China channel up until the go live with TLP. We've been obviously seeing fantastic growth on the Farfetch app in particular within China. It's the number one channel within all of our space. So that's what we're seeing in terms of Tmall and luxury pavilion. As I said before we went live, there was only 200 brands, so those brands did see fantastic growth as part of the shift online and repatriation of spend. The analysis we did before going live showed that the brands that we sell and both Alibaba sell together, the volume being sold on the luxury pavilion of those 200 brands versus ours was substantially higher. And so, that bodes well in terms of as we develop out and get our proposition right, we will also expect to see good levels of volume growth for those brands, but also the other 3,000 brands that we're introducing to the pavilion now moving forwards. So I think, to answer your question, there was some shrinking of the Chinese spend. What then did get shifted home, broadly went online, has grown Farfetch helped grow Farfetch over the last 12 months, has driven fantastic growth of the limited selection of brands on the luxury pavilion. And then, lastly, we've seen a bounce back in terms of store network and offline retail.
So you touched on this a little bit in the guidance question, but we get the question a lot from investors. Given how big e-commerce already is in China and how strong Tmall is, why is it wrong to think that the GMV contribution from China could end up being much bigger this year, even this year than expected?
Look, I have no problem, thinking through what the number could be. What I do have a problem is putting a number out there of what it might be, because whatever number we talk about would be wrong, and that would be wrong for me to put a number out there that either gets people too excited, not excited enough, or inevitably when we don't hit that number because we're really too early into the launch to be able to provide clear guidance, that investors would not be happy. So right now we should focus on what we know we can deliver. We know that 30 to 35% is the level of growth that Farfetch should be delivering over the next 12 months. It will be market leading growth. If we're seeing more benefit coming through from all channels across the platform, whether that be on our white label solutions as we roll out additional FPS clients, whether that be the Farfetch app in China, whether that be the US market, or indeed growth on the luxury pavilion, then we'll be updating the market as quickly as we can. The quarterly cadence of our earnings calls allows us to be able to do that, but to try and dream up a number and put it into the market now would be the wrong thing to do.
Totally understand that. We have another one kind of related to all this coming from the audience. Can you talk about the GMV mix between the Tmall storefront versus the standalone app and Farfetch.cn going forward? How do you think about the dynamics there?
It's a great question. I think we will see probably a fairly broad split between TLP and the Farfetch app, with Farfetch.cn coming in third place. Why do I say that? We are definitely seeing already that the Farfetch app in China is something like 3/4 of our trade in the geography, and that's because you have high levels of engagement. You can do more on the app than you can do on the website, and of course the Chinese consumer is very mobile savvy, almost has leapfrogged over desktop. I think therefore the opportunity in order to sort of champion that or sort of come close to that is on TLP. As we drive customer awareness, that 700 million plus customer base should really drive levels of growth that we've not seen before as we move forward into 2022 and beyond. So I would put those two sort of first and second, with .cn coming in third.
Wanted to just ask a question on economics. If the JV sells a product for $100 and a 30% take rate, walk us through how that would get split across the various partners and Farfetch.
Yeah, absolutely. That's a good way to think about it. The take rate's the same wherever it's sold because that comes from the relationship with the brand. The JV that we set up with China covers both TLP and Farfetch trade on the app and .cn, and that will be split in terms of profitability. 75 Farfetch and 25% minority holders. We will consolidate line by line into the Farfetch number, so what we report moving forward will show it all, and there'll be minority interest back down at the bottom. But in terms of that 30%, the first step is effectively demand generation. So if the product's sold on the luxury pavilion, we will pay a demand generation fee to Alibaba and the Tmall. That's not materially different than our overall average demand generation cost as a percentage of GMV today. That's sort of 7 or 8% you saw us spend across Q4. If it's on Farfetch, then it might be lower in terms of an organic trade on the app. It could be higher in terms of our spending on social media or other areas to attract a customer. But overall, we believe on average it'll bottom out to that sort of 7 or 8% level. We will then, from the JV, pay up to Farfetch a platform services fee. So Farfetch will receive income in terms of use of technology, use of the brand relationships, the overall brand of Farfetch, our editorial and other things that enable the trade to happen. And then there'll be local costs associated with the team that are based in China. We have our own technology team, our own marketing teams, et cetera, et cetera. And then ultimately, whatever's left in terms of profitability at the bottom will be split 75-25, as I said earlier on. So what we're seeing is a broad share of that 30% economics across all the partners, with Farfetch obviously delivering or receiving more of that through the overall ownership structure.
And I wanted to shift gears a little bit. On the last earnings call, you highlighted how there's been a meaningful lift in Burberry's performance on Harrods.com. How many stores are you currently powering on a white label basis? And what do you feel like other retailers need to see to be compelled to partner with you guys? How big of a business could this be in the next 3 to 5 years?
Yeah, absolutely. So we've got now 20 different clients on the platform solutions part of the business. Harrods obviously the largest. We have other multi-brand players as well on the platform. A number of brands that we sell their monobrand website or power their monobrand website. As you say, this e-concession service that we provided to Harrods so they can sell Burberry product direct to the Harrods customer from the Burberry stores was a key part of the development for the product to attract more department stores, because a number of the department stores operate on a concession basis. For me, FPS could be a stronger growth of business in terms of Farfetch overall than the marketplace as we move forward. It certainly was across 2020. There are a number of clients that have expressed an interest, have seen the success of Harrods, and working through what it might be in terms of a replatform to FPS. There is a pipeline of clients that we're working with. We haven't announced any new ones recently, as we've been working in the background on who those clients might be. But certainly for me, it's a layer of growth that we haven't necessarily delivered on in the past, but moving forward will be a main driver of growth for Farfetch as we move forward.
Well, great. Elliot, unfortunately about out of time. There's so many things we could talk about with you, so much you guys have going on. It's great to have you and hopefully get you back live down to the breakers next year. But thanks for being here.
My pleasure. Yeah, it'd be good to see you in person soon.